There we go.
Okay, we are on now. Hi, good morning, and welcome everyone to our live Zoom meeting today. We are going to discuss the impact of the COVID-19 on the real estate. So we'll start by introducing ourselves. I'll start by myself. My name is Salwa Khalifa. I'm a sales representative, and I work with Ash Ellis Real Estate Team, who specialized in residential and investment properties. Who wants to go next? Richard.
Richard. Sure. So I'm a mortgage broker. This is my quarantine self. My beard isn't usually as big, and I'm usually a little better taking more recent haircuts. I think I'm glad this isn't a month later because we'll all be looking pretty rugged, I think.
Yeah.
But I'm a mortgage broker with Vine Group Mortgage Alliance. We are very investor focused mortgage brokers. We work a lot on strategic financing to help that individual get from maybe 0 to 10 properties. So we have a blueprint approach, and I've been doing this for 9 years. I started at the banks. I was at Scotiabank for 5 years. That's the Bank of Montreal for over a year. And financing is what we do. So we specialize, and we're pros at it. We're very good, and we're the #1 team. Our team within Mortgage Alliance has been the #1 team for the last 3 years.
Very good.
Okay, cool.
Avi?
Sure. I'm a lawyer, and I'm currently at Cormans LLP. Cormans LLP is a very strong real estate firm that's relevant to all you guys dealing with mortgages and real estate transactions related to that. In addition to the real estate department, I head the estates department, wills and estates. So usually those two fields are connected and combined. And we go through this stage with COVID-19. We're doing a meeting now on Zoom. And as you can all imagine, the legal world and all of our worlds have been hugely impacted by this thing. So hopefully we'll get to talk a bit about that, from our perspective.
Yes, definitely. Okay, cool.
Very good. My name is Ash Ellis, and I am the team leader with the Ash Ellis Group. We're a real estate team. Again, I work closely with Salwa Khalifa on the other side of this line. We are the top team in our brokerage, 3 or 4 or 5 years now in a row. And we sell a lot of investment real estate. We sell a lot of residential real estate. And we help clients build wealth as well as move. I think that's it. And add to Richard's point, Richard, I cut my own hair. So I did that since I couldn't make my way to the barber. So that's what I'm doing. That's why it's pretty bad.
Not too bad. It's okay.
Not too
it's
bad.
Okay. It's not too bad. Cool. I just want to remind our participants, please, if you have any question, you can send it to us through chat on the bottom. I started already to get some questions. People are very excited, and we have tons of questions. So I have like 3-4 questions about the mortgage deferral. Richard,
yeah.
Tell us about the mortgage deferral. How does it work? Is everyone eligible for it? I have another question. Does it affect my credit score?
Yeah, so the mortgage deferral program, we've got a lot of questions about it. It's taken case by case. So those individuals who are, you have a mortgage, you can ask your lender, being that it's case by case, if you qualify for mortgage deferral. So maybe you need it because you've been laid off, or maybe you need it because of some other reason that you've had a disrupt to your income and you can't service your debt. The mortgage deferral program it works as if, let's say, for example, you have a $500,000 mortgage and your payment is made. Let's say you have a $1,000 payment, 500 goes to principal, 500 goes to interest. The interest gets added to the balance, and you do not make payments on the mortgage. Lenders are doing it a little bit differently. To get technical, you're either extending your amortization on your mortgage, so your life of your mortgage is going to be longer, or at the end of the deferral, your payment may be higher. that's I think the biggest question I've gotten to address it. So that's really how it works. So you have to check with your lender, and some lenders may give you the option to extend your amortization or to change your payment at the end of the deferral. Does that make sense?
Yes. So lenders do it differently, right?
Yes.
Okay.
Yes, and it's case by case per borrower.
Okay.
So you have to ask your individual bank or financial institution. You should. These lenders are going on a trust but verify basis. So they're going to trust what you say, but you should show some documentation and be prepared. So the best advice I can give you is be prepared to be on the phone on hold for 3 or 4 hours, and have some documentation to prove that you have a disrupt to your income. So maybe it's bank account statements that you can show that you're not receiving payment anymore, or from whatever income source you have, or maybe it's a letter from your employer that says that you're laid off. So those are the types of stuff that they'll be asking you for. That's it in a nutshell.
Does it affect the credit score?
I've heard that it does not. It should not affect your credit score.
Mm-hmm.
If you're concerned about that, well, either way, everything should be documented. If you're getting a mortgage payment deferral from your lender, you should have some paper that says this is a deferral. This isn't a skip. Like you're not skipping out on your payment. You should not be getting a credit hit for a missed mortgage payment. That's called an M1 on your credit bureau. You should not be getting an M1 on your credit bureau for a
because I'm
mortgage deferral.
Skipping. Yeah, I'm not.
Yeah,
skipping
you're not.
Payment. Yes.
You've had an arrangement. You've been approved for this, so that should not affect your credit bureau.
What about if I have the option to pay it or not? What do you think I should do?
I think you should make that decision on if you need to or not need to. Like if you totally cannot make the payment, you should inquire with your bank about it. If you can make your payment, you should make it.
Okay, thank you. I'm looking if I have any changes to mortgage qualifications. Okay, I have another question for you, Richard. Any changes to mortgage qualifications, lending criteria, or changes to underwriting guidelines?
Good question. So lenders are looking at. So let's say you're purchasing a property now. They may ask you for more recent income documentation to show like a recent pay stub within the last 10 days. If it's a recent application being sent through, they want to know that you're still working. They're scrutinizing that. They're scrutinizing rental income as well. So if you have rental income and you're applying for a mortgage, they may want to see that again, a recent deposit to your bank account from your tenant. So those are some of the changes. There's nothing fundamentally changing about mortgage lending that we've seen, other than some B lenders are scaling back on their loan to values by about 5%. So let's say you would have traditionally approved for a 75% loan to value mortgage. That's a 25% down payment. Then you may now need to do a 30% down payment if you're in the alternative qualifying space. So let's say maybe you don't qualify for a bank for whatever reason. Those types of lenders are scaling back a little bit. But that's really it. Some institutions like Scotiabank in Alberta are decreasing your ability to use a line of credit for a down payment. So Scotia's changed in Alberta. We may see that in Ontario. You may not be able to use a line of credit for down payment, but we haven't seen that rollout yet. And you can still use down payment lines of credit, secured lines of credit for down payment.
We still can use it.
Yes. Oh, yes.
Okay, cool. I have another question. It's about interest rate. So what's happening with interest rate? So we saw just
lots is happening.
Yes, go ahead.
So there's a lot happening. There's rates going up and down, and everyone's asking questions about this, and there's some opportunities, and lenders are so to take a step back on interest rates. We have, so this is the 5-year bond yield curve. So as you can see, it's a moving curve. The 5-year bond yield is affected by bonds and prices, and this is what is a leading indicator to what happens with 5-year fixed rates. This is the Bank of Canada's overnight lending rate. So this is what dictates variable rate mortgages. We have two different variables that affect rates. So we have the bond yields with fixed rates and the overnight lending rate with the Bank of Canada. There's two different factors. So what we've seen is variable rates come down and fixed rates go up. So that's where the confusion is like a lot of people say, hey, rates have gone up, rates have gone down, and there's a lot behind that. But in a nutshell, to keep things simple, variable is a great opportunity right now. Prime lending right now, so variable rates are prime minus or prime plus. Right now we're still getting prime minus 0.5, so that's 1.95% on variable rate mortgage. And yes, fixed rates are up, but what we saw in the credit crisis of 2008 is that yes, fixed rates went up, but later they will come down. So if you're considering refinancing, now may be a very good opportunity to take advantage of 1.95% on a variable rate, and then wait for fixed rates to come down later. We have a lot of transaction happening like that. Yeah, so consider refinancing now. If you're in like a 3.5% fixed rate, you should definitely have a conversation with your mortgage specialist.
Okay, I got a question related to this. Let me ask it on my way. If I'm buying now, okay, and I will close maybe in 2 or 3 months, what mortgage I should go with, variable or fixed?
So for the most part, we're recommending
2 or 3 months.
Closing, the mortgage itself is closing in 2 or 3 months?
Yes. Which mortgage I should go in Europe?
So prime is 2.45% with most lenders. Each lender has the ability to set their own prime individually. Mm-hmm. But if you can get prime minus anything right now, that's probably a pretty good solution. You're looking at fixed rates right now in the low 3s. If you're getting prime minus, you're like 2.25 versus a fixed at high or like low 3s, like 3.25. So I would say go variable, or even go on a line of credit and then wait for fixed rates to come down later, because they will come down when things normalize. This has been, totally volatile time. And I think the Bank of Canada, to stimulate the economy, they've said, we're going to reduce borrowing rates, and we may see those reduced rates for a good period of time. So I would ride it out variable. But
and then
everybody's individual. Sorry.
Go ahead. Sorry, I interrupt.
So everyone's a little. You should assess your palette for risk if you're okay with that, and we'd have a conversation about that. But in a general sense, variables where I would recommend to go if you're closing in 2 months. Yeah, right now. Yeah.
While you are explaining it, you mentioned we can move from variable to fixed when the fixed start to come down.
Yes.
Can we do this? Anytime we start to see the variable started to go up, the fixed started to come down, can we do this without paying any penalty?
Yeah. So your lender, depending on the lender, but most lenders, if you have a variable mortgage, you can flip your variable rate mortgage into a fixed at no penalty, as long as the remaining term on your variable is shorter than the term you're going into. So let's say you have a 5-year variable and you're a year into it and there's 4 years left. You can go to a fixed rate as long as it's 4 years or more.
Oh, that's good.
No penalty. The contract is that the lender wants to have you for the 5 years. So you'll be tied to them for that amount of time. But yeah, you can negotiate your fixed rate when rates come down. That's what I would recommend.
Okay, that's cool. Okay, Avi, I have a question for you.
Sure.
So I got lots of calls from friends and clients who are tenants or landlords. So tenants are asking, should I pay my rent now or not? landlords are asking, what about if I don't get the lease on time? What should I do?
This is a very hot
Yeah.
topic right now,
I know.
very relevant. And I mean, the main reason is because people just don't have money. They're out of a job, they don't have income. So they're in a situation perhaps where they can't pay their rent. They simply don't have the money to do so. So to answer the question, should I pay my rent? Do I have to pay my rent? Similar to what Richard said about the mortgages, is that if you're able to, you should. That's really the answer to that question. If you're unable to, that's really becomes the discussion which everybody's having right now. So this assumes, and again, like Richard mentioned, you need to have paperwork to prove it, maybe show a termination letter, some bank statements, some sort of proof, not just because you don't want to pay rent. That's not a reason not to pay rent. If you're really unable to, then the Ontario government has come out and said very generously that they're not going to evict anybody because they can't pay rent. So, while you could stay in your place, first of all, the landlord-tenant board is now closed. So there's not much anyone could do, even if they wanted to evict somebody. The courts are closed unless it's for urgent matters. So just dealing with these type eviction matters is not possible right now. So if someone is not able to pay the rent, first of all, they need proof. And then eventually the idea is that they are going to have to pay the rent. And if you just flip it on its head and think of it from the landlord's point of view, he has mortgage payments, he has other responsibilities that he has to pay, expenses. And if his tenant suddenly stops paying rent, then it has a domino effect, and the landlord is going to be in trouble at some point down the line for that lack of income. And then if you want to take it even one step further than that and say, the tenant can't pay the rent, then the landlord can't pay the mortgage, there's going to be mortgage defaults going forward, and the banks are going to be in trouble. And that's just a circular...
And the landlord will be in trouble too, because if he cannot pay the mortgage, he delayed, he deferred it, whatever, but he might end up selling it.
Yeah, and he may be selling it at a loss. Who really knows what the implications are? But the simple question, should I pay my rent or not, has massive implications on the whole chain of events. So again, like the government said, they're not going to evict you if you're really unable to pay the rent. And I think that's on a case-by-case basis. There are certain benefits that the government's providing for people that are unable to afford necessities at this point, and they can make those applications and get some help from the government, especially during this difficult time. But that whole movement of just let's not pay rent April 1st, I think was a bit misplaced, and I don't think there's legal basis for that. Again, if someone's not able to, we're not going to kick them out and put them on their streets, but I don't think the COVID-19 and the situation just gives all tenants a freebie not to pay rent. So the answer is you should pay rent. And if again someone's unable to pay rent, I would begin by having a discussion with the landlord, telling them the circumstance, having an open communication with them. And again, they can't evict you, but at least come to some sort of understanding about when you can pay it or what your prospects look like going forward. And that's an important part. Perhaps lawyers come into the picture if there's a breakdown in communication between landlords and tenants. Commercial properties have a slightly different regime. It's not like residential where they're going to be living on the street. There may be more strict rules with commercial properties, which I'm happy to discuss as well. But I think communication is a big part of it with landlord tenant, and finding a way to pay the rent, not finding a way not to pay the rent. So that's a good starting point.
Yeah, that's good. I think that's fair enough. Go ahead, Ash.
And Sawa, if I could add, we have a lot of tenants as well, and some of the strategies that we are including or telling our clients to put into place is speak with your tenants, see what their financial position is, see if they've been affected by COVID-19. Are they going to be able to make their rent payment? And lot of people are applying for the benefits tomorrow. I believe we can start calling in tomorrow for the CERM, the $2,000 a month. So be flexible with your tenant. Be a human is the advice that we're giving them. And if they can't pay April 1st, possibly delay it till April 15th. That's one of the strategies. If they can't pay, use last month's rent, which you would have already got, and utilize that towards April 1st. So be flexible, come up with a payment plan with them. That's what we're advising our people, and stay in communication with them.
Thanks, Ash, for the ad. And I always say it's always the relationship between people. Keep it good. So communicate, talk, and you are fine. You are going to find a way to solve this.
Yep.
Thanks, Ash. I'm glad you are here. Okay.
Okay.
Tell us, what, as a realtor every day in the market, what changes do you see in the market now, in the real estate market?
All right. So, good question. This is a lot of people want to know what's going on in the market
nowadays.
Let's start with 2 months ago, January, February. It was a hot market. You couldn't keep a house on the market for more than 2 days. It was flying off the shelf. We were projecting 10 to 20% price increase for the year 2020, the way things were going. We had a lot of pent-up demand going back into December, a lot of people needing to buy and unable to fulfill their buys because of a lack of inventory. So we saw this huge run-up leading up to COVID-19. COVID-19 came along, and it still was a seller's market. After the shutdown about a week ago, we've seen everything slow down. Okay, and we've seen things slow down for various reasons. People don't want to go into other people's houses. People who are selling houses don't want strangers in their houses. Realtors don't want, for social responsibility, they don't want to get in the car with buyers or sellers and encourage that as well. Open houses have been canceled as of yesterday. We can't even have it. So we're seeing a lot of changes, and a lot of people have slowed down transactions. So we've seen a big slowdown in the transactions. Now, again, that is as a result of everyone having to stay home. We still do see houses up for sale and people having to buy. And you need to keep in mind that there are emergency situations where people need to transact. You've got people who bought, for example, a month ago, and they need to sell today. So they're the ones listing their house today. And on the flip side, people who sold 2 months ago have to buy, and they're in the market now. You've got people with emergency situations. Perhaps they lost their job and they can't afford their mortgage payment and now must sell. You've got estates, people passing away and they have a vacant house and they need to sell it to move into a retirement home, or maybe the kids need that money to fund a retirement home. There's various scenarios where people have to sell, and those are the transactions that are taking place right now. So we've seen a little bit of a slowdown in the number of transactions. But actually, I forgot to speak in terms of prices. Pre-COVID, we saw prices rising, and it hasn't gone down and it hasn't gone up. We're still in that level in the last 2-3 weeks. So we have not seen prices drop.
Okay, and this will take us to a question I just got. So I'm thinking of buying. I already started to do some showings. What's your advice? Should I buy now or wait a little bit? Maybe the prices will go down.
Okay, so I guess there's 2 ways to look at this, and I guess we want to talk about where the market is heading, because you can't decide on what's happening now without knowing where the market is heading. So there's 2 ways to look at this. So the first way is you go back in time and you see what happened during the last recessions. I mean, we are in a recession now. We're not working. We are in a recession, although the numbers have not come out. We're considered in a recession. So if you look at the last few recessions, typically we saw a decline in housing prices followed by a huge run-up, right? We need to keep that in mind. So if you follow history, you know that in the medium to long term, you will see a huge run-up in prices. And that's partly because of the stimulus from the government and people getting back into the workforce. we need to keep in mind also that this is not a typical recession. This is a recession caused by, you went to work yesterday and the government said stay home today. The government is helping us fund our stay home cation, if you want to call it. There are supplements from mortgage deferrals, as spoken by Richard. Municipalities are deferring property taxes and utilities. Credit card companies I saw are helping, allowing you to defer. There's emergency funding coming from the government. So it's not your typical recession where, you know, you get laid off and bye-bye. This is a funded recession. So people are going to be able to come out of this very fast. The day they say, you know, okay, the lockdown is over, now go back out, people like myself are going to want to get out of the house. They're going to want to take their kids out to the movies because they've been stuck indoors all day. They're going to want to go out to the restaurant or get their tires changed or fix their car that they couldn't do. So, and in turn, the restaurant needs to hire and the Cineplex needs to open, and all the people just rush right back into the work. So I see the recovery is really fast. So, you know, is this the right time to buy? Sure. You know, you've got, if you've got the mindset of an investor or you're looking to grab a deal, it is out there. It is out there. If you talk to the big heavy hitter investor players out there, they are availing funding. They're going to the Richards of the world and refinancing, freeing up their cash so they can buy in a time like this. If you were waiting for the sky to fall and looking for those deals, that's now. The sky just fell. We're in the peak of that storm, but we are going to come out of this. It's not like anything else that hasn't happened in the past and we haven't come out of it. So is it a good time? Yes, there are deals. Look for them and you know, get in on those now.
What about being ready if there are good deals? Do you want to talk about this? Do you want to add?
So being ready is obviously very important. You know, if there's a good deal, there could be more than one person looking at that deal. So this is the time you want to talk to your financial your bank and get yourself pre-approved and ready. So if you do see that deal, you're in a position to jump right into it.
And get maybe a pre-approval. I always thought,
absolutely, you're
people
right.
Get a pre-approval. It costs you nothing. While you have a job, you are in a good position. Get a pre-approval in your hand. Yes.
Get a pre-approval.
If I could jump in on that, that's totally you're totally right. It right now is a great time to do the preparatory work to get into the market when you need to later, or if it's, you know, sooner rather than later, whatever it is that falls within your agenda. I'm one of those guys that has like a little sign off at the end of my emails. It's success doesn't just happen, it's planned for. I'm one of those guys. So it's a matter of you know, planning, because if you do need to refinance before you buy, that whole process can take up to a month. So, you know, talk to your specialist and have a review. A mortgage review is encouraged once a year.
What about refinancing? Okay, sorry, Ash.
Yeah, good question.
Refinancing. I heard some mortgage agents are encouraging people to get refinanced while they still have their job, everything is still excellent. Yeah. So I heard encouragement about getting refinancing. Could you please explain it more, Richard?
Yeah, so refinancing is basically you have a mortgage on a property. Let's say, for example, it's $1 million property. You have a $500,000 mortgage, and you want to access more of the value of the home in financing. You can access up to 80% of the value of your home if you're approved. So in that case, $500,000 is the existing balance. You refinance up to 80%. That's $800,000. All of a sudden now you have access to $300,000 proceeds from the refinance. You may take that in the form of a line of credit, or you may take that in the form of a mortgage, whatever fits best with you, with your plans. The refinancing now, you know, getting access to down payment funds is something that you can do now to prepare refinances. We're doing a lot of refinances now because you know, there's not that many purchases taking place. Things have slowed down. But in terms of, you know, where the opportunity lies, so back to these kind of variable versus fixed. You may have a fixed right now. Fixed rates are they follow the the 5-year bond yield. And if you're at this stage right here, this is where COVID happened. So we saw bond yields go down, but fixed rates went up. So fixed rates are there's a big kind of premium on fixed rates. There's a premium on fixed rates because lenders are looking for liquidity. They're worried that there's a recession coming, a little worried that that's coming. So they're wanting to make more money to opt to be liquid. And then so variable is this is the Bank of Canada overnight lending rate, and typically you would see variable a little bit higher than where it is now, but it's still very low, like in a general sense. So variable is a great opportunity. Again, talk to your mortgage specialist and see if refinancing is a potential cost savings for you. You want to look at the remaining balance on your mortgage at the end of a refinance to see if you're saving money or not. And there's a full analysis that can be done on that.
Nice. Avi, I have a question for you. Are you able to do closing now and signing? Like, how do you do this with social distancing?
Very good question. And the Law Society, our governing body, has actually taken this up and allowed us to do commissioning online, on Zoom, for example. So there's a bit of a process. We go through a checklist, we prepare the documents, and then we send them to the client. And then just like we're having a Zoom call now, the client shows us the documents like this, and then puts the camera down like this and signs right there, if everyone can see. So we do witness it, and then if there's an actual place for us to witness, they send us by courier the physical documents, and we witness it right there. Sometimes we make a little note that this was done virtually because of COVID-19, and for our real estate transactions, that's been largely okay. I mean, different banks could have different requirements, but due to the troubling circumstance, most people have been quite understanding about that process doing it online. The more challenging issue comes with the wills and estates, which I mentioned I also do. And wills have what's called strict compliance, where you have to sign in front of two people in their physical presence. Now, commissioning has the same law, but the Law Society has relaxed those rules for commissioning, commissioning is what we do for real estate transactions and mortgages. So again, that we're allowed to do now online, and that there shouldn't be any issues with real estate transactions or mortgages for everybody on this call. So we can continue to operate and close deals without even meeting the client. We have certain additional safeguards, put it that way, because there's a lot more opportunity for fraud when you're not meeting the person. So we have to be extra cautious. But to answer the question is, real estate transactions and mortgages are okay at this stage to do on video conferencing. If anyone is interested in estate planning, wills and powers of attorney, and this is also a great time to do that. Everyone's sitting at home, so I have been quite busy with the wills part of my practice, and that we're doing similar to real estate transactions, means we're doing things online, but because the law hasn't caught up with wills yet, we're suggesting clients to come in physically and sign when COVID ends. Once everyone's allowed to leave their house, we're going to re-sign everybody on their wills. So it's not ideal. There's a few extra steps involved, and some people may find it difficult navigating the documents. Usually there's a big stack of documents, as you know, for both real estate transactions and estates, and it's hard when there's not a lawyer there to show people, walk you through the documents. But we're managing so far and haven't run into any issues as of yet.
Great news, great. And we all are looking for that time when we start to hear the good news that we can go again outside and work naturally. That will be really great. Let's hope for those great news to come soon.
Yeah, the changes going forward, I think this has changed our lives forever. We're having a Zoom call now. What are the chances of us going to have this kind of meeting in person going forward? Yeah, it's likely, but it's so convenient doing it on Zoom. So I think the world has changed permanently going forward. And I think that could have the same effect on lawyers, meaning real estate transactions. And once we've accepted online digital signings, I think it's going to be hard to go back. So while we all look forward to going out to socialize, I think, and I don't know the law. I'm not saying this as someone making the law, but I think we're here to stay. That going forward, we'll be able to do these electronic signings.
You're right. It was very strict happening before, and I was really surprised that they changed it, and the government decided to change it, which is really awesome. And it's a way trying to solve problems and trying to make it work. I have a question related to what we are talking about now. How can both parties sign on same document? And imagine I'm not working in the real estate and I don't know the answer for this, but this is someone who's asking about it. How both parties sign on same document?
So that's kind of like I mentioned with the will type stuff. We need original documents for a will. So with the will, it's a bit annoying that the client signs and then they have to send the original documents to us because we also need an original signature. Other documents, however, it's called countersign, where you don't need the original wet ink on the same page. You can do what's called countersign, which is, say there's 3 different places for people to sign. The first one will sign on his paper on the first line, the second person will sign at their house on the second paper, and the third person will sign on the third line. So instead of them being one document with 3 signatures, there'll be 3 documents with 1 signature on each page, and that'll become the countersigned document. So that's another way of doing it.
You do it digitally. Do you use DocuSign, or what do you use?
No, DocuSign is a bit problematic with mortgages and with registering real estate transactions. So we need a signature, an actual signature for the most part, but it could be digital, meaning we don't have the physical signature here. They can scan it and send it to us. Okay. So the bottom line is we're solution oriented, and we're going to find a way to get it done one way or another. And whether it's digital or sending the documents via courier, deals have to close, and we're here to facilitate that.
Okay, that's
great. Can I ask a question?
Go ahead.
So I've had some clients get declined by a lawyer for an e-signature, like a not in-person signature. Is that because that particular lawyer didn't want to do it, or they didn't trust a non face-to-face legal signing? Is that the reason why? Is it up to the lawyer?
Yeah, there could be many reasons involved. It depends what the circumstance was. If it's a mortgage document, I'm assuming, because it's you, Richard?
Yeah.
So a lot of times the banks have their own requirements, and they're the ones who could be the ones that saying, no, it has to be an in-person signature. And, the problem usually starts with the bank. If the bank says it's okay and they accept electronic signatures, then, a lawyer shouldn't cause an issue in such a case. A lawyer should accept the instructions of the bank. But what I've been doing because the situation is new and some maybe old school lawyers aren't comfortable with technology, to put it nicely, I usually give them a call in advance and just give them a heads up that this is what we're going to be doing. If you see documents that look a little bit different, that's because, of COVID-19, and we're doing it electronically. And so far I haven't had an issue, if you follow those protocols and you give them a call up front, because that solves things. Like I said, with the landlord tenant, it's all about communication. If someone just decides unilaterally one way or another, that usually surprises people. So that's what you do with the signing as well.
Great.
Ash, I have a question coming to you. And it's not one time. I got it like 3-4 times. Where do you think the prices are going to go? Up or down? They insist and they insist.
All right. So,
yes.
we don't have a crystal ball is where I will start with. Yeah. But I will say, we've seen recessions in the past. And if we go back to 2009, when the financial crisis, when the last recession was hit, if we had a crystal ball back then, we should have bought everything we could, because today, it's doubled. And, if history were to repeat itself 2 years from now, we would see the same thing. In times of low interest rate, in times of where the government is pumping lots of money, stimulus into the economy, in times where the governments are printing money, this is a time of potentially high inflation. And when there's high inflation, the best place to be is hard assets. Hard assets are real estate, things like gold. If you're in the stock market, look at gold prices, right? And they're doing pretty well. Hard assets like real estate. So as money becomes cheaper, hard assets go up in value. So from a medium to long-term play, that's where it's going, right? And so I believe house prices are on its way up. Again, in the short term, depending on how long we're stuck at home, it's going to be a bumpy ride. We could see some softening. We could, but that's what we're saying to our investors. Now's the time to jump in, right? And if you're a seller, maybe hold on, because in that medium to short term, medium to long term, you're going to see prices move up, and it could move up very fast. To summarize what Richard said, rates are 1.95, 1.95. I had a client last week who paid a $18,000 penalty on their mortgage. I repeat, $18,000 penalty on an approximately $1 million mortgage. They broke their 3.55% interest rate and locked in at 1.75%. Wow. Okay. Now, $18,000 a penalty, but in year one, they were saving about $18,000. In year two, potentially another 18, year 3, year 4, year 5, right? With a low interest rate environment, you can borrow more money cheaper. If you're an investor, that's more cash flow in your pocket. If you are a buyer, first-time home buyer, you're going to possibly qualify for more money. Am I correct, accurate in that, Richard? Now that rates are lower, we could qualify for more?
Slightly, very slightly more.
Slightly more. But our payment is coming down, right? But our payment is coming down. So the affordability is much cheaper. And, again, Richard quoted 1.9. 2 months ago, the rate was 3%. So there's a 1% spread on a $500,000, $600,000 mortgage. That's about $500 a month in interest savings. So you're going to see a flood of people jumping into the market. Everybody's just looking for that light at the end of the tunnel before they do it, right? So is it a good time to buy? Sure. Now's the time. Don't buy after we're running up. It's now. I personally believe it's now. How long it's going to be bumpy, I don't know. I don't know, but I do know. You look at the countries that are coming out of it. Is the hope that the light is shining at the end of the tunnel?
Yeah. Back to your point there, Ash. That your client. We're seeing a lot of that too. It's pretty safe to say that you're gonna. Well, it's very safe to say that. You may pay, yes, you're going to pay the penalty. If you do the math, there's going to be some significant savings on the other end. And it's very safe to say that you'll be able to lock into a fixed rate later if variable comes up, because it will normalize. Variable will come back up. But at that time, the fixed rates are going to be lower than where they are now. So you keep an eye on things and you monitor. And if you want to go to fixed later, you can. And as we talked to Salwa, with Salva before, you can flip from a variable to a fixed with no penalty. So that's the strategy. And if you're looking to save money on interest rates, there's definitely opportunity in getting educated on these two sort of indicators and how to keep an eye on things. You should, if you're in the market for purchasing, you should be following the 5-year bond yield. Call me and I can give you some links and let you know what to keep an eye out for. And then for the 5-year variable rates, that the Bank of Canada announces that 8 times a year. In the last 30 days, this drop right here, a full 1.5% drop due to COVID. So that's
big.
these were unannounced drops. 2 of them were unannounced. So pretty drastic measures by the government of Canada. I think the government of Canada is doing a really good job fiscally, and I think we're in a good position as a country to weather this storm. Our financial system is extremely resilient, and we've seen that in the 2008-2009 credit crisis, and so I think from a financing perspective, we'll be all right.
I agree with you. I agree with you, Richard. It is not the first time the real estate market in Canada got hit like a big hit. It's not the first time we experienced this in 2008. We experienced it in end of or mid of 2017. And always the real estate market in Canada proved that it is strong enough. The government is taking great care of it. And we always were able to come back and the prices goes up again. So I agree.
Yeah, there's the government's injecting. So there's an initial package of CMHC buying mortgage pools. The initial stimulus package, well, not stimulus, but more protectionary measures, was $50 billion. They're going to back end insure $50 billion of mortgage pool investments. Now they've upped that to $150 billion for insured mortgages. Basically, the government's saying that we're going to step in and we're going to protect those mortgages to protect the financial system, which is phenomenal. The credit, as Ash was saying, credit card interest rates, that's an unregulated market. Institutions can get away with charging 24%, 19% on credit cards. The big 5 banks, a lot of them have announced that they're reducing interest rates on credit cards because naturally, I mean, if you can't make your mortgage payments and you have no income, what are you going to use? You're going to use credit cards. That industry is unregulated, but institutions are stepping in to say, we're going to give a break off you. I mean, you're still probably paying 10%. So that's very recent news too. So institutions are keeping an eye out for people, I think, and hopefully not too many people are going into credit card debt because of this, and they're taking advantage of the government programs and the Canadian emergency relief benefits and not having to go that route. That's a sinking ship, credit card debt.
Another question for you, Richard. Do we need 10 business days for mortgage approvals on a live deal these days? As you know, it is always, or mostly, it is 5 days, 5 business days.
For a mortgage approval, so you go and buy a house, and then are you talking of condition of financing period?
Yes.
That is tough, right? Because of institutions transitioning their underwriters to work at home, and all of the systems that they have to transition to different servers to be able to do that in privacy, and you know, just the underwriters themselves getting acclimatized to working from home. Maybe they have kids and they don't have daycare help at home, so things have slowed down. Definitely slowed down for mortgage responses and commitments and condition fulfillment. So you get a commitment, and then there's a conditions on the commitment to fulfill. That can all, like 5 business days.
A normal day.
5 normal business days is we can probably get it done. Nowadays, I would recommend, if you're putting a condition of financing on it, try to get a little bit more periods for condition of financing. But it's really up to the buyer and you guys and how you decide on what's the most competitive time frame for a condition of financing. But so that's 10 business days. The file has to be complete 10 business days before the close date. That is a firm sort of rule across the industry. So there's different. It's really case by case, and that also will vary lender to lender.
And if I could jump in, Sawa, it's becoming the norm now to have 7 to 10 business days as a condition. It used to be 5, but 7 to 10, we're seeing our buyers put that in. And the other condition that a lot of people are putting now is condition of sale of their home. If they're looking to buy first, they're also looking to say, hey, it's conditional on sale of my property. So 2 new conditions that are starting to come into today's environment.
Yes. That's good. Thank you. Another question for Richard. My mortgage is about time to renew. It's about interest rate. Should I renew it now or wait? Maybe the interest rate will go down.
So talk to your institution, wherever your mortgage is held. Let's say you have a mortgage at Scotiabank or TD. You know, reach out to your lender and figure out what they are offering you for in terms of early renewal. Some lenders will let you early renew 6 months before the maturity date. Some lenders only let you renew 3 months before the maturity date. And you know, get that offering from them, get them to tell you what it is. Usually if you're early renewing, it's not going to be as competitive as if you are renewing at maturity, because you're still within the contract. The lender knows that they have you sort of handcuffed if you're early renewing. I would say that if you are considering early renewing anything, you know, look at the variable, reach out to a mortgage specialist that isn't a part of that institution, like a mortgage broker, and ask them what you can get alternatively with a different lender. But early renewing, you probably don't want to early renew into a fixed rate right now, because the fixed rates are at a premium because lenders are looking for liquidity. You'll pay more for a fixed rate than you would otherwise when things are normal, because lenders right now are looking for to make more profit, to get, you know, more liquidity, having that if things, you know, if people stop making their payments, they have a buffer to pay from. So that's where we're seeing this curve essentially. Fixed rates are much higher than they would need to be. They should be like down here, but they're like up here in a nutshell.
Another question for you.
Sure.
I have a house mortgage will be mature by June. I want to sell it by that time, or maybe by August. It depends on the market. So what's the best option to carry the mortgage from June to August or September?
So depending on your mortgage, let's say you have a home equity plan and your mortgage is maturing in June. From June to August, if your lender allows, or your product, or your mortgage product allows for you to go into a line of credit, that's probably the best solution, because lines of credit are at like prime plus a half. You can find that, or even prime only. And the main thing about that type of situation is to make sure that you're not putting yourself in a penalty situation. So that, because you're out of the contract in June, why be roped into another fixed term, something closed, because then you'll pay a penalty when you sell. So make sure you're into something open, and whatever the best rate is for that open solution should be what you should be taking advantage of. You should also consider your cash flow. A line of credit is interest only repayment. So if you need to go down to interest only because of maybe your job is taken, your income has taken a bit of a hit, from a cash flow perspective, the interest only solution will have a lower payment than an open mortgage, which is amortized, if that makes sense. Basically, the mortgage will have a bigger payment. So if you need cash flow and a low rate, a line of credit is probably the best
Cheaper?
solution for that.
Do you think
Cheaper,
it would
yeah.
be cheaper? Okay,
Yep.
cool. I think that's good enough. And we almost to end this meeting. It will be done just in few minutes. I have a question. Is Scotiabank in Ontario allowing HOLIC to be used as a DP for buying rentals?
Yes, currently they are, yes.
Okay, good. I have another question. I bought a house a month ago and we are to close in a month. Can I cancel it?
Good question.
Oh,
question
Avi,
for Avi.
It's not for you. I think it is for Avi.
Yeah.
Yep, and this will be our last question. I'm sorry, I see like other questions, but we will be done by 11, so we will end it up by just after Avi. Go ahead, Avi.
Yeah, that's a really hard question, and
Yes.
it very much depends on the circumstances. But whenever there's an agreement of purchase and sale that's in place and is signed, if someone wants to cancel it unilaterally, meaning on their own without consent of the other side, there's a risk of litigation, a risk of getting sued. You put in the house, and now the sellers, you put in an offer, right, to buy a house, and now the sellers wanted to sell a house. They already made other plans, and the prices may have gone down. So they have the right to come and sue you for the difference in whatever they sold it to you for at this time and whatever they can get now. And if the market goes down, you're in trouble. You're on the line for the rest of that. So it's always a tricky thing to cancel, nullify an agreement of purchase and sale, not go ahead with the closing. Case by case circumstance. So perhaps it's worth to sit down with the lawyer. And you have to be careful because there's a lot of exposure whoever cancels a contract. So I'm not saying it's not possible. It is possible. But it's dangerous and it's risky.
And what about the deposit? What?
Yeah, deposit. I mean, if you get consent from everyone, you get it back. If there's no harm, then the sellers can agree to give back the deposit. But otherwise, you may end up losing the deposit because that's exactly what the deposit's for, to make sure that you go ahead with it. So now you decide to back out, your deposit could be gone, frankly. And if you put down a $50,000 deposit, for example, and the value of the property has gone down 100 grand or more, it still could be in your best interest to lose your deposit and still walk away if you're allowed to. So it's a commercial decision, it's a legal decision, and it's not an easy one, but it's possible. If, for example, you've lost your job and you have no other way of buying this property now, that could be a legitimate reason, and you have to discuss that with lawyers, the sellers, the seller's lawyer, and really try to find a solution. But an agreement of purchase and sale is like a loaded gun, and you have to be very careful about trying to back out of it.
Okay, in which we all don't want to see it. Honestly, it's like I said, very sad. Yes,
exactly.
Very sad situation.
Very sad,
we don't like anyone to be in it. Yes.
Yeah, it affects lots of people. Like I said, people could have a chain of transactions, selling so that they could buy and vice versa. And this could ruin all those plans. And then they can come back and sue you for not only the damages you've caused them by backing out of the purchase, but maybe if they're now affected because they can't buy the property that they wanted to buy, that also is part of the damages. So if they can justify damages, it could really be not worth it to back out. It depends really on the circumstances. I don't mean to scare anyone. Sometimes there could be a situation where the seller frankly agrees and says, I understand the situation is tough and we'll allow you to back out. But that's very unusual. Usually there's damages involved. And while it's possible, it's not recommended.
Okay, thank you, Avi. Okay, now we have 1 minute for each of you to just say something at the very end. So I will start with Ash.
Continue social distancing. I think that's important. That's my social message there. And I also, in summary, I don't think this is the end of the world when it comes to housing or your biggest asset. I think we're going to come out of it. The vaccine is sort of in the works. Then I think, we'll start to see things run up still. That's my message.
Excellent. Avi.
Sure. I agree with Ash that social distancing is very important, no question about it. But I do think also that our role, I know as real estate lawyers, but perhaps also as real estate professionals, is we're essential services, and we have to continue because the economy is very much based on the work that we do. And if we, sit at home in isolation, transactions aren't going to close and the economy will ultimately come to a standstill. So I feel that us even having this call and continuing to operate is very important for the Canadian economy, and we should do our part to keep moving things along despite our new reality. So good luck to everyone for that. And in addition to real estate transactions, now is a really fantastic time to do estate planning. So if anyone doesn't have wills, that's my 2 cents to throw in there, that we can do a Zoom call like this and really get people protected. So continue going, keep a smile on your face, and keep doing business, and this will blow over soon.
Excellent, thank you. Richard.
Just quickly to the person who asked about the down payment stuff from Scotiabank, line of credit for a down payment for rental. Don't worry, Scotia is still doing it, and there's many other lenders that are still doing that. So don't worry. In a nutshell, yes, continue social distancing. We're all in this in the same boat. It may, it may not be a yacht, but it will get through it, and it'll normalize. We're in it together. We haven't, had to do any civic duties, but we have them now, and it's pretty easy. Stay home, right, and be safe. Things will normalize, and thanks guys for having me on. Thanks for organizing it.
Excellent. So it's my turn now. So I would like to thank you everyone today. I'd like to thank you, Richard. I would like to thank you, Ash and Avi, for your time and for great answers we got today. I would like to thank every participant today, and everyone sent a question. And just please accept my apology. I see some questions we didn't get the time to answer them right now, but promise we are going to get the answer and send it to you. And at the very end, you know what? I believe we are going to be okay. We always trust this country. We always trust the government here. It's always a wonderful country. We are going to go out of all of this. It's just, we are waiting for the good news. Once we start to hear that the numbers started to be lower or to flatten, this is all will be over. At least we will be able to have like kind of normal life. Then we will come with huge energy. We all now miss, I always say that I miss to be busy, to be super busy. I really always complain about this. I was very, very busy. Now I'm missing it. And I promise in front of everyone, I'm not going to complain about this anymore next time, because it was awesome. It was awesome to be busy. It was awesome to be able to see everyone. And for people from my culture, it was awesome to meet them. It was awesome to have wonderful gathering all the time. So we wish all the best for everyone. Let's all stay positive, stay safe, and wish to see you all soon. Thank you.
Thank you very much.
Guys.
Thanks, guys.
Thank you.
Bye.
Bye.
Bye.